Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look at the technical picture of the euro currency. So although on intraday charts the downside performance looks really significant, on a daily chart it makes not as significant impact, as mostly, as you can see, Friday action stands inside of the Thursday performance. But and actually, by taking a look at the daily chart, you could just tell that, well, nothing actually has happened, as market stands in the same consolidation that is not totally erased chance for upper continuation. Well, this might be really the truth, but actually we have the new inputs on the weekly chart. And with these new inputs on the weekly chart, the recent drop, and actually especially the reversal bar of the last week that we talked about, has absolutely special meaning. It's because as a result of the recent performance on the weekly chart with these 5 sessions, we've got the bearish grabber right at the fib resistance, and in general on the weekly chart we have the pennant shape performance, which is potentially bearish. And with the bearish grabber in place, it's really hard to find any reasons for long entry right now with the background that we have. Of course, statistics could intrude in the performance next week as well. As you know, we will get the inflation report in the United States. So this week on Friday as well, the major driving factor has become the statistics, non-farm pros release, which is always some kind of the lottery when you're trying to make the bet on it. That's why actually I always talk about this, that I prefer to escape and to not take part in trading with the big report releases. So, but with the technical background that we have currently, I wouldn't consider taking a long position right now. The only way when we could do this, if market will take it out of the stop and keep going higher, erasing bearish grabbers and breaking up the resistance here. So that will give us a different picture. But right now the overall context remained bearish. On the 4-hour time frame chart, we also have some indirect signs. So already few of them I've already mentioned. And first of all, we said that here's not really strong upward performance. This is not some frosting action, it's a bit choppy. Market hits just minor extension and shows deep retracement after that. That's what we already mentioned last week, divergence as well. But more important, that take a look in the moment where the market actually has to reestablish upward continuation, because retracement after COP is over. So market has to keep going higher after the first reaction, but it hasn't happened. The non-farm payrolls was positive and market has collapsed once again, which is also this consolidation after just the COP target. Well, it's not really great performance for euro currency as well. So be aware of the statistics on inflation next week. Makes the decision whether you would like to part in the trading during the release or not, because it also might be some surprises. Supposedly, if inflation will be the same or even higher than it was last time, that just confirms the reaction on the non-farm payrolls, that Fed has more freedom in more aggressive action on the rate decision, and it makes more possible to drastic rate shift in September, for example. So this anyway, it will be supportive for United States dollar. Soft numbers on inflation suggesting that it is peaking right now, so maybe provide some support to the euro currency, but hardly it will be very significant. So that's why in the current circumstances, by looking at the hourly chart, I suppose that we could consider for scalp trading resistance levels right there in the thrusting action down against the previous top. If you would like to take the short position in a larger scale on the daily chart, for example, in this case you probably need to consider this top as an invalidation point, so because this is also the top of the weekly grabber, and bearish context will be erased only if market will erase it and move above it. So with the watching for the same levels probably for position taking as well. Returning back to our strategy on Fridays, take a look at market actually has erased not only the fib levels to the downside, but what's more important is take a look, market has dropped below the C point. It means that the performance of the hand shoulders is over, as ABC pattern is cancelled, and there is no bullish perspective based on this pattern anymore. It's just because no XLPs, it's just because market erased this action. It means that this upward action is over and markets keep going lower. So that's actually what we have on the euro currency. And as usual, we have prepared the weekly report. So there we are analyzing recent data, taking a look at the Bank of England decision, take a look at the overall situation in the economy, and update our long-term view. In general, based on the information that we have currently, we do not see any reasons to change it. We still think in the long term the same targets, 97.50 below the parity in the nearest term, more or less nearest term, I mean. And then a bit in the longer term, it's 90 even below the parity. This is our targets for euro currency.